Break out this thesis for us. You believe that we're in the early innings of a commodity supercycle that started when the pandemic started. So how much longer does this supercycle have to last? What commodities benefit from it?
All of them is the answer to number two. And the way supercycles work is they typically last at a minimum a decade. We're 3 years into this one. The shortest bull supercycle on record is about 9 years. So you can kind of see we're probably third inning, use that baseball analogy. And what they do, super cycles tend to lift. It's kind of like that tide that lifts all boats, all commodities, because there's a certain amount of money that is flowing in because prior to 2020, it was 10 years of terrible pricing. Producers didn't want to produce commodities, so now we're short commodities. That's what's propelling this whole super cycle. And before you can get producers back up again, running and really churning out different commodities, it ends up being roughly a decade each time this cycle happens. And this kind of history does repeat often.
So that means based on history, it's history, but we have like another 5 or 6 years left in the super cycle.
Yeah, I'd say at a minimum. The cycles in the last 100 years are a little shorter, so they're around 10 years. Okay. If you go back into the 1800s, they're closer to 20 years. So you can have 20-year cycles. I would say we're going to be probably closer to 10.
All right, yeah, we're just looking at the chart where, for the audience, the gray areas of the bear market, and then you see the spikes after the bear market. So I want to talk about two of the most widely held and traded commodities. That's oil and gold. You have a price target of $90 for oil year end, 22% upside, $21.50 for gold, about a 6% upside for year end. Give us a sense. How do we get to that point between now and then?
Yeah, I think you'll hit the recession first. You'll have those recession fears around, is everything slowing down? And that's roughly why I'd say oil has backed off that $100 level that it was last year. It's really anticipating that recession. But as we start moving into the back half of the year, it'll be very clear it's a mild recession. And by 2024, we're probably taking off again globally from an economic standpoint. I think oil starts anticipating that. And by year end, we're 90. And our 2024 targets are even higher. They're into the hundreds.
All right, so you say we have super cycles. We have ups and we have downs. So I think a big question for a lot of our audience, should they just always hold commodities and kind of wait out the bad times and then benefit from the rallies? Or is this the one part of the market you can kind of time because you have these 10-year periods?
Yeah, you do not need to be in commodities all the time. But like you said it, Frank, in that 10-year period, that's when you want to own it. Great diversification benefits. Think last year, stocks down, bonds down, your average commodity was up 14%. That's what happens during bull super cycles. And commodities were also up in 2021 and 2020.
Okay.
You kind of notice the pattern.
All right, John, I'm going to put you on the spot just a little bit. What's one of these commodities that maybe outside of oil and gold, obviously, one of these commodities that might see a bigger upside considering all the economic conditions that we're facing right now and also some of the macro conditions? Of course, we have a war in Ukraine that's impacted agriculture as well.
Yeah, probably platinum. Essentially what you have is there is a historical relationship between gold and platinum. There are only 4 precious metals. Platinum is rarer than gold, so historically trades at a 30% premium to gold. Right now it trades at a 50% discount. It got hit from this move into electric cars because platinum tends to be used in catalytic converters, gas cars. But what we're seeing is producers are finding new ways, specifically in technology and electric cars, where we're using more and more platinum. So I think that converges, that 50% discount in platinum will eventually converge with gold.